All right, we're back with another lesson. In this lesson, I want to talk about execution, which is kind of a follow-up of our first lesson. And it's an essential part because, like, you can have a system, right, and all these statistics and hypotheticals, but really, when you're actually in the field, when you're during trading hours, right, when you're executing, um, you have to make sure you're performing at your top level, or it's easy to, even though you have a system, you could become not disciplined, you could get emotional, you could start getting hopeful, and that could completely mess you up. So we're going to talk about how we can perform um, more disciplined, better, not emotional, so we can execute and actually be profitable and actually take advantage of our systems. And before we jump into that, I just want to recap on our A setup results. So it's Monday after trading hours. So I've updated um, the stats on the strategy with the trades I took today. So now we have 12 total trades as our sample size. And both of them today were winners. So now we have 10 wins, 2 losses. Our updated win-loss ratio is 83%. But our average percentage winner did drop a little bit. So I think it was like 48% before. Now it's 44%. And our average percent loss stayed the same. So we're still at a 4 to 1. But yeah, the reason I wanted to show you guys this is because it's important to continually update your statistics, because as we'll discuss in future lessons, you have to be able to adapt to the market, because the market isn't always going to stay the same. There's going to be different market conditions, and this setup could be working very well right now. Like, it's performing super well right now, but maybe in a couple months, maybe it's not working as well. Maybe the win-loss percentage becomes 40%, or the average percentage winner drops dramatically. So we have to keep on keeping up to date with our statistics, because you want to know how your setup is performing up to date. Like, you don't want to have statistics that were from months ago when the strategy was working, but now it's not working, and you're still trying to implement the same strategy. So that's why I wanted to show you guys the updated statistics. And also, the higher the bigger your sample size, the more accurate your statistics are going to be, because you have more data to go off of. So yeah, and I also wanted to show you guys a hypothetical scenario using these stats. So I'm actually going to pull up a random number generator, and we're going to go to our R multiple spreadsheet. All right, so the way this is going to work is, so our starting capital is going to be $1,000. Our R is going to be $20, which is 2% of the account, and the number right here is basically our position sizing. So every trade we're going to go into whatever this number right here is. And how I got this number was, since our average loss is 8% and our risk per trade is $20, 8% of this would be $20. So that's how I got that number. And then this number would be what our average win is based on a 44% average winner. That's 44% of the 250, our position size. So that's how I got those two numbers. And then we're going to be using the R random number generator for our win-loss percentage. So since we're winning 83% of the trades, if we generate a number and it's 1 to 83, it'll be a winner. And if it's 84 to 100, it'll be a loser. So the first trade we took is going to be a loser. Let me just change this here so it's not annoying. Okay, so our first trade is a loser, so we're going to be down $20. Let's see our second trade. It's a winner. So now our winner is 107. You see how this updated? So now our winner is 107.8. Let's generate another one, another winner. Now our winners are bigger, so 119.66. Another winner, 132.82. Another winner. See, this is the advantage of having a high win rate. 86. So that's actually a loser. So our loser would now be 29.75. It's bigger than our original because now our account's at 1,400. So negative 29.75. Let's see what our next trade is. Another winner. So 160.38. And this is all based on the statistics we've gathered on our strategy. So I just want to give you guys a hypothetical example of your results that you would get with this strategy with $1,000 account. 83. So that's the winner. Wait, yeah, that's a winner because it's right at 83%. 178.02. Our account's already doubled. It's at 2,000 within what, 8 days? 31. So you can see just how profitable this strategy itself can be. 95, that's a loser. So negative 39.88. 68. 214.95. Another winner. So I'll speed through this a little bit till I get to the end, and you. Oh wait, that's the wrong number. I'll speed through this part so you guys can just see the end result. But that's basically what I'm doing, and then I'll see you guys when I get to the end. All right, so we reached the ends, and now you can see our account is at. Why is it different here? Did it stop updating? Ooh, okay, I might have messed up on this. Why does it say 9,000 over here? Oh, because this one was starting at a different number. Okay, hold up. Okay, so our actual account size is 5,000. Don't mind this number. This, I guess I didn't update the sheet. I don't know what this number. I don't know why it's messed up like that, but okay, these numbers are wrong. This is our account size, 5,493. Oh, so this one is starting off this number. Okay, yeah, the sheet is messed up, but so basically our account grew from $1,000 to 5,493 hypothetically, right, after 1 month of trading this strategy based on these statistics that we've gathered off 12 trades. So I wanted to demonstrate this so you guys can see, one, the power of the R multiple. So as you size up, the more you win, right? The bigger the risk is, but also the bigger your winners are. So then we're able to take advantage of compounding. But also when you lose, you also size down. So you're protecting yourself to the downside and taking advantage of when you're on a winning streak, right? So that's the advantage of using the R multiple. And then we can also see how what you could typically expect for using this strategy based on these statistics that we've gathered. So you can see just how profitable this strategy can be, and yeah, I hope you guys get a better idea of that. You guys can try this out. Just use a random number generator. If you have your own strategy and you have your statistics, you can just try this out, and then hopefully you guys understand how to do this now. But yeah, just wanted to demonstrate that 1,000 to 5,500, so 500% return in a single month, just using a single strategy. So yeah, just wanted to show you guys that. Moving on. So I want to talk about practice versus game time. So what we just did there, right, would be classified as practice. Or when you're paper trading, that's practice. Or when you're, creating a strategy by looking at past charts, that's practice. So the issue when it comes to, translating what you do during practice versus when you're actually trading with real money is, one, you're dealing with a lot of hindsight bias. And if you don't know what hindsight bias means, it means that, the event has already passed. So let's go to a chart, for example. So this was a trade I took on eBay today on the break of the previous high of day. But you see how now we know what's happened. So like now, if I hadn't traded this, I could be like, oh yeah, I could have easily entered here and sold over here. But when you're actually trading, you don't have these three candles. You're just basing it off of these candles, right? So you have to make a decision here and not when you already know what's already happened. So that's one issue that comes when you're practicing, is you have a lot of hindsight bias. Also, if you're paper trading or like if you're using the on-demand feature on Thinkorswim, uh, it's not the same because you don't have any emotions, because you don't have any actual money at risk like you would if you were actually trading live. Um, Another issue is, again, if you're paper trading or you're using the demo feature on the Thinkorswim, you get instant order fills. But when you're actually live trading, they might not be instant, and so you might be dealing with slippage, and that can change your results. So although hypothetically, it looks good on paper, um, you have to make sure you're executing your plan. And the reason I point this out is because this might look good on paper. You're like, okay, I'm just gonna start using the strategy because he said I could turn 1,000 into 5,000 in a single month. Right. That's if you were executing perfectly. The statistics stayed the same. So I'm gonna talk about how you can maybe improve your execution and try to get as close to this result as possible, because you're never gonna get this perfect result, but you can try to get as close as possible. So a couple of things that I personally do to improve my execution is I follow the 60-40 rule, which this is talking about emotions. So you never want to be trading when you're above 70. So if you've just had a huge win and you're super excited, you're euphoric even, you don't want to be trading, or you want to be at least the minimal is you want to be aware that you're not at 60-40. You want to be aware that you're trading with excitement, so you might want to size down. And that's actually what I mentioned in my daily report card today. If you guys haven't checked out my daily report cards, by the way, I post them every single day in the Discord. I think it's very useful, and you could learn some more insight onto how I trade. But I think I talked about it right here. Right here. Contrary to what most people think, it's actually smart to size down after huge green days, as it helps ensure you don't become reckless and trade while you're euphoric. And that's super important to understand, because if you're trading euphoric, you might not be paying attention to your risk. You normally might be risking $200 per trade, but you're like, I just had a big win, so why not just risk $300 on this trade? Or it could be on the opposite side, right? If you're trading below 40, you've just had like a terrible week, like you're down a couple $1,000s, and you're like, okay, I wanna make this all back this week. I need to get back in the green. And usually when you're under 30, you're focusing too much on your profits, your P&L, trying to make it back, and you're not really focusing on your risk, following your strategy. You're like, oh, this chart looks good, I'm gonna jump into it. You start getting FOMO. You start getting frustrated, and you don't never want to trade when you're frustrated or when you're too euphoric. So it's important to follow the 60-40 rule, trying to stay in the middle, and this goes hand in hand with it. But journaling, this is kind of how you keep track of where you're at, because when you journal, you get to know yourself better, because usually when I journal, I try to write down mistakes I made during the trading day, things I did good, and that helps me kind of understand. And I also like try to write down how I think I was emotionally, like would I grade myself to be in the middle? Was I trading when I was at or above 60, or was I trading when I was at or below 40? So that's why it's important to journal. You kind of you keep track of stuff better, and you're able to understand yourself better. And like I said, the most important thing to do is be aware if you're trading at 60-40 or if you're not trading at 60-40. So maybe you're trading at 70. So it's really important to be aware of that, so you can actually correct it. And if you journal, you'll be able to know mistakes you do when you're not trading at 60-40. The next thing that helps me execute and get as close to this result as possible is planning my trades, right? Because let's go back to the practice versus game time, right? When you're practicing, when you're charting, like maybe it's late at night, the night before, you're charting out your stuff, you're not really dealing with emotions, because you're not in a trade, right? You're just looking at the charts, actually thinking about them based on what you see and not what you feel. So when you plan your trades, that gives you an advantage when you're in the game time, because you've done all the planning before while you weren't emotional. So basically what planning your trades allows you to do is it allows you to be in the game time without an emotion, because all the planning you've made, you've done it when you were not emotional, when you were actually looking at the charts, um, not hoping it goes up because you didn't have a position. You were just looking at them. Um, there's this word I'm looking for, but I can't think of it. But um, you're looking at them not subjectively, but objectively. That's the word. So you were looking at the charts objectively, and that's exactly what you want. So it's important to plan your trades and then actually have the discipline to follow through with them, because a lot of people I've seen, they plan their trades, but when they're actually trading, they don't follow their plan. So it's like, why did you even make the plan then? So you have to have the discipline to actually follow your plan, because that's the whole point of making a plan, right? And the last thing is treat trading like a game, right? Now, this one's a little bit tough to explain. It's just something I do, but really what it means is you don't want to think of trading like, oh, I need to make this much money by this time, right? No, your mindset should be, okay, I just want to perform the best I can perform, whatever that is for you, and just focus on playing the game well. And the way you do that is by developing a strategy, planning your trades, journaling, staying emotionless, or at least being aware of your emotions so you can better, how to act when you're not at 60/40, stuff like that, right? And don't try to, like I always tell people, don't set daily goals, because daily goals can mess you up, because you're trying to aim for a certain goal. And so you're telling yourself, I have to make this much. I have to do this. I have to, like, you don't have to do anything. You just have to trade well and the money will come. So treat trading like a game. Next thing that's really important is systemizing. So there's actually a clip from this video by Be The Story. And I recommend you guys check out this full video. I'm not going to show the full video because it's like 40 minutes long. Obviously, I'm not going to show the full video, but check out this video and many more. He interviews so many traders, and there's so much knowledge you guys could gain from that. So definitely recommend checking out his channel. But I want to show you guys this short clip where he talks about systemizing and why it's important.
Want to go. Speaking of systems, elaborate what you mean by systems. And you can share like an example of what maybe you do yourself, but like give us an example of what you mean by a system, because that's very vague. I can assume I know what that means, but I want to understand what you mean by when you say have a system.
Yeah, so a very great example of somebody who does a fantastic job of this is Ripster. I'm sure you know who Ripster is. Ripster is absolutely amazing. He developed these EMA clouds. And so one of the things that he always talks about is this idea of only trade stocks that have strength or weakness if you're on the short side. And so for him, his system is based on these clouds. He's like, if on the 10-minute chart it is writing these clouds up, then and only then will you continue to add size into the position that you're in. But the moment that a candle closes below the cloud, the 10 EMA cloud, and confirms with the next candle, that is when you cut the trade and walk away. Doesn't matter if you're up, doesn't matter if you're down. It's like your system has told you there's weakness in this play. The momentum is breaking down, so you need to go ahead and sell so you can preserve your capital. That is just a great example of a system that I actually use pretty often when I'm trading specifically weekly options. I don't worry about it as much when I'm looking at like leads and things that are a couple years out. But when I'm trading weeklies that have an expiration date, it's like, well, yeah, that's my system. If it's riding the cloud up, I'm gonna stay in it. If it goes into the cloud, I'm gonna wait for the next candle. If it confirms that it breaks down, I'm cutting it. I'm not gonna let hope that it might turn around and have a big bounce be the thing that keeps me in. I'm going to just develop the system, trade the system. 7 times out of 10, it's gonna work for me. 3 times it might, but the 7 where I win, it's gonna be a lot more profitable than.
All right, so there's 2 main key takeaways I want to take from this video. First of all, you can see how he has a clear system in place, and that's what we talked about in the previous lesson, right? You have to have a certain criteria for a trade. His is the EMA cloud. Like I said, it could be anything. It doesn't matter what your strategy is. It just matters that you've proven that it's profitable and that you follow it, right? That's the most important part, because what a system allows you to do is avoid, like you mentioned, sometimes people enter a trade and it starts going against them, and then they start hoping that it starts going up. Like if you're hoping when you're in a trade, like you're not going to be successful, because like that doesn't give you an edge being hopeful. You have to have a proven edge, and the way you make sure that you follow that is by having a system, systemizing it, and having rigid criteria that that way once you're in a trade, you know exactly when I should get in, when I should get out, if I should be in this trade, if I should not be in this trade, and that's exactly what you want. So, and that's another thing that helps you in your execution, because if you know exactly when you're going to get in and out, then it's easy to be disciplined, because you're not guessing, you're not hoping. There's no emotion involved. There shouldn't be any emotion involved, because you know exactly what you have to do, because it's all pre-planned, it's all systemized. And that's what I hope you guys take away from that video. And like I said, check out the full video. It's so many great stuff that he talks about. I obviously can't cover it all, but great video, great interview, and great story. Moving on, I want to talk about something that's very important. and that's that you shouldn't have. You should never have any big losses. A lot of things that wipe out smaller traders is having big losses. And what are big losses caused from? Being emotional, not being disciplined, um, being hopeful when you're in a trade, not trading when you're 60-40, not pre-planning your trades. All this stuff leads to big losses. But you should really, if you have a concrete system and you're disciplined about it, you should never have big losses. Like, look at our stats. Our average percent loser is 8%. 8%. Okay, it's not 20%, 50%, 60%. Like some people, I've seen people let their options expire negative 100%. Like, what are you doing, bro? Like, no. You should never have big losses, right? It's only big wins. You should only ever have big wins, small wins, because that's gonna happen, or small losses. Like, I mean, it's inevitable to lose. Like, you're gonna lose every now and then, but you gotta make sure you're keeping them small, bro. Like, you have to. Like, it's just that's the way you survive. Next important thing to talk about on execution is knowing yourself. And there's a very, very, very good article I linked earlier in the Discord, but I'm pretty sure a lot of you guys haven't seen it yet. And it's kind of extensive, so I can't go over everything that he talks about, but definitely check it out. I'll just go to the top so you guys can see the name. Win rate secrets revealed, and I'll share the link with you guys. But pretty much what he talks about is knowing yourself. And I'm pretty sure you guys have heard this before, but a lot of pro traders tell people, create a system that fits your personality. And what that basically means is you can adjust certain things within your strategy that kind of allows it to cater towards your own personality. So here's an example, right? So you can take this trade right here many, many different ways. These are just 4 examples, right? So, and what he talked about is you can adjust your risk level, your risk based on your personality. So this example right here, I really like it because it talks about how John, he knows himself because he knows that the max he can see on his screen is negative 100. So that's something important to identify. Like, you should identify what's the max you can lose on any given day. Like, if you're down $500, will it matter to you? Like, are you able to stomach that? And you got to identify that for yourself. And once you identify that, you can come over here and you can adjust your strategy based on what you identified. So let's say a 1R is $50. So for John, the strategy that would fit him would be a 2-1 risk to reward. And you can see here, the red is it's the thing that's getting adjusted. And based on that, your win rate is going to change. Your risk to reward is going to change. And, planning your trade is gonna differ because now your price target might differ. And your, your stop loss is going to differ. And as you increase your stop, your price target is going to increase because you have more room to give it space to materialize. And then as you decrease your risk, you're going to have a lower win rate because it's more easy they're going to get stopped out. But your reward is going to be a lot bigger because your risk is so little. So I hope that makes sense. If it doesn't make sense, read the article. He explains it a lot better. He goes very in depth about it, and definitely check it out. But basically what I'm trying to say is know yourself and adjust your strategy based on that. So our strategy, for example, our winners are pretty small. If we made this winners even bigger, like if we allowed this to be 15%, 20%, then our average winner could probably be bigger as well. It could probably be like 60%, 70%, 80%. And if you're more of a patient person, then that's probably something that suits you. If you're impatient, maybe you want to decrease this to 5%, and then this might decrease as well to 30%, but you're okay with that because you know that you're impatient about it. So stuff like that, right? And hopefully that makes sense. So we already went over that. Something that's also has helped me is visualizing. So before your trading day, if you have your plan ready, visualize yourself selling at your price target or your stop loss, right? And what this helps you do is when you're actually live trading, right? you're gonna be able to remember, okay, I just visualized doing myself this, so it's easy, it's gonna be easier to press the buttons, click buy, click sell. And I don't know, for me personally, it just helps me stay disciplined because I've already visualized myself selling at my price target, selling at my stop loss, right? That way, when you come to your stop loss, like if a trade is going against you and it reaches your stop loss, you're not hesitant. You're like, okay, easy, just sell, right? So that's something that's helped me personally. Another thing is sizing down. If you're having trouble with execution, just size down, bro. Like even if you're only trading one share, one contract, I don't care. It's not about making money. It's about getting consistent. Once you get consistent, then you can worry about actually making money from your strategy. But if you're not able to stay disciplined, then size down. Like you have to get to the point where you're being consistent. That way you get confident in yourself, and then you can actually worry about sizing up, making money, and all that. But the first thing you have to make sure you get on lockdown is consistency. You have to make sure you're consistent. And you can do this also when you're looking for a strategy. Maybe you haven't found your setup yet. So try around, mess around, maybe even paper trade. But find your setup, size down, like be only trading like one contract, one share. And then once you find your strategy, once you have 10, 20, 30 trades, and you know the statistics and you're confident about it, then you can size up. And that helps you because you're not going to be emotional because you understand your system. You understand there's going to be losses, but you understand you're going to have more winners. You understand you're going to take losses, but they're going to be smaller than your wins. And the final thing is that's helped me stay disciplined when I'm trading is be disciplined in everything else you do. Like, and I'm not talking about like trading related stuff. I'm talking about like everything else you do in your life. So start being disciplined about going to the gym. Start being disciplined about going to sleep early. Start being disciplined about eating healthy. Start being disciplined about, whatever you want to do about your work, your schoolwork, whatever. Be disciplined in everything you do because that'll translate into your trading, right? You'll find that it's easier to be disciplined in your trading because you've already practiced being disciplined in every other aspect of your life. So it's just part of you, right? Like discipline has become part of you. So that's also really important, and that's something that's helped me if you're personally struggling with staying disciplined with your strategy, staying disciplined with your trading. But that's it. I know this lesson was a little bit longer than the previous one, but we went through a lot. So if you have to review it, definitely go review it. There's a lot of good value from this lesson, I feel like. And a lot of this has really helped me when I've applied it to my own trading. So yeah, hopefully you guys enjoyed it. If you guys did, leave a like on the video. Share it with other traders you know. And let me know what other topics, questions, or things you want me to cover in future lessons. But yeah, thanks for watching. It's been me, Zero, and I'll catch you guys in the next one. Peace.
I say I love you, you say I love you too. Somehow it don't sound the same as when I say it to you. What's been going on? Can you tell me please? And I'm not trying to start a fight, I just wanna believe. Seems these days it gets quicker every time that you leave, but takes hours for you to come to me.